Any questions? 1 hour time. Don't rush it, please, please, please. Steph, and we'll come to Adil.
I've got a question. It's in relation to the toms that you mentioned.
Yep.
So I still haven't quite got my head around it yet. So,
Yep.
So the toms is basically a tour operated margin scheme. It basically works in the way that if you kind of have a rent-to-rent service accommodation business,
Rent-to-SA, yep.
The rent element, as long as it's kind of like, well, this seems to be some sort of consensus with it. As long as that varies ever so slightly and it's not like fixed all the time, then it's kind of something that you buy in and can completely offset against your revenue, and you only pay VAT on
your margin.
The margin.
Yep.
Is that right? Is that how you? Because sometimes you have rent that is just fixed. So how?
Even if the rent is fixed, it works.
Okay.
Yeah.
So it's still.
Because as long as you are the principal, not the agent, okay, and you're buying in a service, and you're selling it retail and not wholesale, which you would do, because you're going to supply that service to different guests over the year. So you're not selling it wholesale as one big package to one person. You're selling it to different people. Toms will apply.
And then, what do you mean with the principal and not the agent?
So that's going to take me 15 minutes to explain, but you can contact me and then I'll talk you through what is the difference between a principal and an agent. An agent, generally speaking, is somebody who's acting for somebody else, okay, under their instructions, generally speaking. I'm keeping it simple now. Okay? So in your particular case, you're not going to be the agent because you're not acting on their instruction. You're just paying them. You're taking the risk and you're dealing with the client. Okay? Whereas with an agent, it's a bit like a lettings agent. You just make a 5, 10%, 15%, whatever fee you charge as a commission. Then Tom's doesn't work for you. But with rent to SA, you're not an agent because you're never charging commission. You're usually paying them a fixed rate, and you're making the markup on top. Yeah? So you're going to save a lot of VAT if Tom's applies to you, which you already know anyway.
Electric cars, there's benefit in kind is going to be zero from April on.
So from the 6th of April, if you buy an electric car, there's no benefit in kind tax. So basically, if you have a limited company and the company buys the car for you and you drive it personally, you've got private use. Generally speaking, depending on the CO2 emissions and the value of the car, you've got to pay a tenner tax. It usually isn't worth doing. But if you buy an electric car from the 6th of April, there's 0% benefit in kind tax in that year. So 2020, 2021, 0. 2021, 2022, you pay 1%. And 2022, 2023, if I've got the years right, you pay 2%. So it makes good sense to buy an electric car through your company.
So leasing or buying off? What is?
You can do either or because you still get caught by benefit in kind tax. So you can have a contract hire if you want, or you can buy it outright and do a hire purchase agreement. It doesn't matter which.
Can you do the same with partnership as
No,
well?
in a partnership you can have an electric car, but there's no benefit in kind in tax because you and your partner are the business as such. Okay, so therefore there's no. It's not a separate legal entity. With a company, separate legal entity, yeah.
So can you offset your the expense of your?
You offset your expenses, but then you say, I've driven 20,000 miles in this particular year. I've used 4,000 miles personal use, 16,000 miles business use. So you say 20% of the costs are personal, 80% are business. So you claim 80% for business purposes. The other 20% is disallowable. Limited company, you claim the whole lot, and you just pay benefit in kind tax. But obviously, if there's no benefit in kind tax, then the whole cost goes to the company. If you have a company and the company pays for the fuel, you've got to pay even more tax on top. but obviously there's no fuel with an electric car, so you're not going to have a problem with that. So if you can buy an electric car, I know they are expensive like a Tesla or whatever, it's good. But even if you have a hybrid, the rates are pretty low at the moment because the government's incentivizing you to go green.
Is that only through limited company? Can you do that through an LLP as well?
You can do that through an LLP, but there's no benefit in kind tax on an LLP either.
It's still much better going through limited.
If you have a limited company and you want to buy a car, get an electric car. But if you already have an LLP, Mark, there's no point setting up a limited company. Just run through that. Yeah. Yeah. And don't just buy an electric car just for the tax advantage, because but you could end up buying a 70, 80 grand Tesla. Don't just do that just because it's got tax benefits. You got to work out, does it work in your circumstances, and is it right for you? Yeah. Don't let the tax tail wag the dog. The worst thing you can do. But bear in mind what the tax consequences are and think, how can I change my business or transaction to make the tax work for me, rather than just focusing on the tax alone. Yeah, tax is a consideration, okay, amongst a number of other considerations. So don't be kind of just focus on the tax. Just see it as an icing on the cake.
My wife and I own a number of single lets
Yep.
in our personal names, and I'm pretty sure, famous last words, that that's the most efficient thing for us tax-wise at the moment and for the foreseeable future. But if at some point I decided I wanted to incorporate, what are your initial thoughts, quick thoughts as to what I need to look for to optimize it?
So the first thing that you need to bear in mind is, if you own property in your own name and you're looking to incorporate, and your property portfolio is of a size that you can demonstrate to HMRC you have a business, then when you incorporate into a limited company, you won't have to pay capital gains tax because you claim Section 162 incorporation relief. Yeah?
What kind of size would that be?
It's not just on the size. You've got to be spending 20 hours or more as on your business every single week. So size comes into it because you've got to have a certain number of properties to spend 20 hours. If you've got one property and you said, I spend 20 hours a week, it ain't going to wash, is it? If you've got, say, 6 or 7 or more, or if you've got 2 large HMOs, you could possibly justify spending 20 hours depending on what you do. Yep.
If you've given it to a manager to deal with it, you can't.
That's going to reduce the chances of spending that time. Okay. So you could have some with a manager, but if all of them, it just makes it harder. Not impossible, it makes it harder. So you could avoid capital gains tax if you read on the Elizabeth Moyne Ramsey case. Just type in the Ramsey case, Elizabeth Moyne Ramsey case. It's in the tax book deal anyway. That's going to tell you about the facts of that particular case and how they Miss Ramsey didn't have to pay capital gains tax. Your next challenge is to see, can you avoid the stamp duty land tax? If you have a partnership business with you and your wife, and you can formalize that, and it looks like a partnership, and it is a partnership, as a partnership, then when you move those properties into a limited company, you won't have to pay stamp duty land tax. If you don't have a partnership, John, you're going to have to pay the SDLT, and the SDLT on its own might make it not worthwhile. So think about, if you have from what you've said, you and your wife own property jointly. Owning property jointly in itself doesn't constitute a partnership as such, but you could have a partnership agreement. You can file partnership tax returns and make sure it looks like a partnership, which it is really, but you just got to formalize it a bit more. Mortgages in both names, bank accounts, all that kind of stuff, all the bills being paid by both you together, yeah? So it actually becomes a partnership, which it is, but you're probably not doing that right now. You're probably filing tax returns. You file, if you own the property 50-50, you declare 50% income and expenditure, and she probably does the same.
Not exactly, but...
Whatever the ratio might be.
Yeah.
Okay, but let's just call it 50-50 for now. 50-50. So you just want to make that into a proper partnership, yeah?
Thank you.
But that's not the only solution. There are other solutions, but your question was incorporation. So I've answered your question,
Yes.
okay, in the way that you asked it, yeah?